Welcome to Next to Madison, a podcast to help you live your best life.
Hey, welcome back. Another exciting episode of Next to Madison. I am your host, Madison Malloy. This is episode 166. And on this episode, we are talking about crypto, specifically the Polkadot network, which I don't know too much about. So I'm very excited to learn more about it. We're going to be hearing from somebody who has also started a stablecoin on the Polkadot network and various other dApps and projects. So, yeah, we're just going to kind of dive into this. Again, this is not financial advice. Always do your own research and before you're investing, and never invest more than you can lose. So we're going to get into all good things crypto. So this is an episode you're not going to want to miss. We will be right back with our special guest on this episode of Next to Madison after this brief message from our sponsor.
This episode is brought to you by Balance 7. Balance 7 is a concentrated alkaline with a pH of 11+. I didn't realize that acidosis is responsible for almost every infectious disease in our world today. With COVID-19 and the world opening back up, I started taking Balance 7, and after 3 days of taking it, I feel better, I have more energy, my focus is better, I think clearer. This supplement is amazing. Thanks, Dr. Noristani, for the recommendation. And all Next to Madison listeners are able to try it today by visiting balance7.com and enter code word Madison for a complimentary gift and free shipping.
All right, welcome back. We are with our guest of the hour, Dan Reecer from the Acala platform. So he's going to talk to us more about Polkadot, stablecoins, all good stuff crypto. So welcome to the show, Dan. How are you?
Great. Yeah, thanks for having me.
Yeah, no, I'm super pumped to have you here because as I was saying in my intro, I'm not as educated on Polkadot as I am on other blockchains. So I'm excited to learn more about this. So with that being said, why don't you just tell us like more about Polkadot and like what it is and why you guys are building on it?
Yeah, definitely. This is over the last few years, one of my favorite topics. And I actually came from the Polkadot team before starting at Acala about a year and a half ago. So I've been around this, kind of seeing it being built from the ground up, and finally starting to like really begin to launch and teams beginning to go live. But I guess rewinding back 6-7 years ago, Gavin Wood is one of the original co-founders of Ethereum. Ethereum actually started with Vitalik writing a white paper, meeting up at a pub in the UK with Gavin Wood and another guy named, I believe it was Bitcoin Johnny, something like that.
Okay.
An anonymous guy from the internet. And they met up and talked about Ethereum. Gavin thought it was cool. So he took kind of what Vitalik had written up in the white paper as the kind of the idea, the concepts. And then Gavin's a kind of brilliant coder. So he took the next few weeks and started really coding out Ethereum and what it is today. But what happened was a year or two into this kind of journey into Ethereum, Gavin started to realize that, like looking ahead 6-7 years, he was anticipating that Ethereum wasn't going to be able to keep up with the demand and the amount of applications launching on it. So what we've seen today with gas fees or transaction fees being super high on Ethereum, that's kind of what Gavin had anticipated back in 2016. So a lot of discussions happened internally, and then Gavin ended up splitting off from the team and building Polkadot. So this has been being built since around 2017. Gavin started the Web3 Foundation in 2016, and he actually is the one who coined the phrase Web3 back in a blog post in 2014. So long time coming. You can actually Google that.
Okay.
And then he started Parity Technologies, which is based in Berlin, and has had about 150 plus developers building Polkadot every day for the last 7 years. And with that, he also rebuilt kind of the whole framework that is required to build blockchains. And with that in mind, he was trying to fix a lot of the issues that he had seen with the previous Ethereum setup. So being able to scale with a lot of kind of like mainstream use, institutional use of blockchains that he anticipated coming. And then also the ability to connect together a lot of different isolated blockchains. So the issue that he was trying to solve there was like Bitcoin, Ethereum. These are all kind of islands operating on their own. as if, imagine the US internet not being able to communicate with the internet in the UK. It just wouldn't make sense. That's kind of how blockchains have been operating for a while now.
Okay.
So what Polkadot does is Polkadot is a network of up to 100 connected blockchains. So it allows blockchains to communicate with one another kind of seamlessly and natively. The other thing Polkadot does is it provides the security for all these blockchains. So as a blockchain that we call parachains building on top of Polkadot, you simply plug into Polkadot's security set, and it allows you to secure your blockchain without you as the developer team having to go to all that effort to do that.
Interesting. Okay, so how does Polkadot compare to other blockchains like Cardano or Algorand or Polygon?
Yeah. Yeah, so Polkadot, the tough thing about Polkadot is that it's kind of the first of its kind. It will have a comparable system when Ethereum 2 launches. Ethereum 2 is also working on building this kind of multi-blockchain ecosystem or kind of universe. Right now, Polkadot's the only one kind of doing this. Polygon and Cardano, Ethereum, Solana, these are all what we refer to as layer one blockchains.
Yep.
But these are all kind of inherently operating on their own. So a lot of their teams are working to get as many applications, companies, what have you, to build on top of their blockchain. But in order to communicate with other networks, it requires bridges. And these bridges over the last 6 months or so have shown they are susceptible to hacking risk, and they're operated by a small set of people. So if there's also kind of collusion between those people, there's risks of transactions being hacked and what have you. The other thing about these other layer one platforms is that they're more generalist. So they're offering a platform for games, for NFTs, for decentralized finance, and they're trying to kind of do everything. Whereas with Polkadot and the way that kind of the industry is moving now, it's moving to a little bit more of an application specific blockchain. So blockchains built for specific purposes. So maybe one for IoT devices, another one for privacy, another one for decentralized finance. And this is kind of the thesis of Polkadot, is all these blockchain teams building something that's very good at one thing, but allowing them to all kind of communicate and work together in one environment.
Without having to like bridge and risking kind of up.
With no bridging, because Polkadot has technology that allows these blockchains to communicate data and value between each other natively, since they're all part of the same system. So there is no like bridging risk involved in those interactions.
Very interesting. Okay. And so you then launched a stablecoin on the Polkadot network. So tell us about that.
Yeah, exactly. So Acala was started by 4 co-founders. 3 are actually in Auckland, New Zealand, and then 1 is in Shanghai, China. Okay. I started very early, about 1.5 years ago, but they have actually been building on Polkadot since over 3 years ago. We're one of the first teams building. And it all started after they had tried to build on Ethereum. They realized that Ethereum's gas fees and just kind of scalability issues weren't where they wanted to build in the longer term. So they evaluated Cosmos, they looked at Ethereum 2, and they looked at Polkadot, and they ended up going with Polkadot for a lot of the reasons that I kind of walked through earlier. And then when they started looking ahead at where Polkadot was headed, all these kind of blockchains working together, if you think about like any economy, you can't have a flourishing economy with factories and stores and sub-economies in a country without a currency, without a dollar, without a stable currency kind of helping as an infrastructure layer to kind of operate that economy.
Yeah.
So the same thing came to their mind. So if we anticipate a Polkadot world where there's 100 blockchains working together, for any of these really abstract or really cool kind of use cases to take shape, you need a stablecoin that's kind of native to that world. So they came up with aUSD, which is a decentralized stablecoin that we can get into kind of later about how that works, but
Okay.
collateralized by crypto. So it's actually backed by crypto. If people listening are familiar with DAI, this is a similar type of stablecoin built on Ethereum by MakerDAO.
Okay.
That stablecoin was kind of meant for the Ethereum blockchain, whereas aUSD is a native stablecoin to serve the entire Polkadot ecosystem. So all of the blockchains and then all the applications built on top of those blockchains. So we built aUSD, and then we were able to build kind of a custom blockchain around that stablecoin to help facilitate a healthy stablecoin, and then to become almost like a liquidity or a financial kind of center of the Polkadot ecosystem. So that's where we are. We launched in December of this past year, so we're about 5 months in. The stablecoin launched about a month and a half ago. And the chain itself is worth, I believe, about $500 million in total value locked on the network. And right now we're just working with a lot of the other teams on Polkadot to get integrations going, to get the stablecoin kind of flowing over to their networks. So yeah, a lot of exciting stuff going on right now.
No, it's very exciting. Okay, so if somebody was to buy aUSD, obviously the only benefit of buying a stable coin is so you can put it somewhere and earn a higher yield. So what's the best place to buy and store aUSD?
Mm-hmm. Yeah, so right now, like I said, it's still relatively early on. So aUSD is available on our blockchain. So there's a decentralized exchange where people can acquire aUSD with other assets like DOT, native to Polkadot, and then also on centralized exchanges. So KuCoin has listed aUSD, and many other exchanges will start rolling that out soon. Okay. And this will allow people to hold aUSD and then begin to use that within any application on Polkadot, as well as in the future, any kind of supporting wallets or applications, what have you. Right now, a lot of people using like USDC or DAI or other stablecoins can earn, I know with USDC, you can earn like 7% interest on BlockFi. I know Coinbase has some kind of yield products there. So that's really our work right now, is getting a lot of those integrations going so that there's more and more places to use the stablecoin.
Yeah, and more incentive for people to buy it, right?
Yep, exactly.
Yeah, I mean, that's the only reason like some people have, Gemini or Tether, is because of obviously the yield.
Yep.
Because of the yield.
Yeah, I mean, that's
the dollars, or put it in another crypto, But speaking of stable coins, there is some hesitation from some people, and people realized, I think after what happened to Luna, that people don't fully understand stablecoins, and there's a lot more, and people are a little bit scared. So let's just talk about the Terra Luna thing really quick, because it's like the most kind of talked about. It really kind of almost collapsed the system, it felt like.
Yeah. I mean, people even compared it to...
Yeah, what exactly happened?
Yeah, so I guess starting with what happened. So Terra is a blockchain that was built, considered in the Cosmos ecosystem. So Cosmos has this framework that you can use to build a blockchain, and Terra built a blockchain kind of around a stablecoin. The way the stablecoin was making an effort to work and to maintain a value of $1 was that they used kind of this relationship between UST, which is the stablecoin, and Luna, which is the token that operates the Terra blockchain. The issue was that UST wasn't actually backed by any sort of crypto. It's called an algorithmic stablecoin. So it used an algorithm, or this method of minting and burning Luna, as the supply of UST went up and down. So what happened was in an up market, so the whole global economy, the stock market, everything, we had one of the biggest bull runs ever. Okay. So when you're riding that wave, an algorithmic stablecoin like this works great. The other thing that UST did is they had an application called Anchor Protocol.
Yeah.
And Anchor was the main reason why anyone wanted UST, because you could earn quote unquote risk-free yield at 19.5%. So a lot of people were going to Terra.
Insane. Looking back now, people are like, no, high yield, high risk.
Yeah,
like
exactly.
There had to have been, and I remember I was going to go in and get a bunch of UST because I had some other stable coins that I was earning a lower yield on. And somebody told me about the Terra Luna thing. And I just we somehow didn't connect because they were going to show me and kind of like walk me through it. Cause I'm like, something seems a little off here. By the grace of God, we didn't connect. I'm like, oh.
You avoided catastrophe.
Because I have a lot of friends that had I have one friend that had 50K in there.
Yeah. No, it was very widespread kind of damage. So yeah, so that was what drove demand for UST. That was their kind of killer app.
Yeah.
And this also worked great in a bull market. So it was almost, I think what I thought back on is when I was a kid, my parents taught me, if it seems too good to be true, it usually is.
Yeah, right.
And this is what all of these really smart adults forgot. Everyone forgot that lesson. And what happened was over time, the market started kind of going in the other direction. So the Terra foundation behind that stablecoin, they were actually in the meantime buying up a ton of Bitcoin, billions of dollars of Bitcoin.
I remember
to essentially, to try to build almost like a backstop behind that stablecoin in case it did fall below $1, to try to basically arbitrage or buy up the stablecoin to get it closer to $1. But as the Luna token itself that kind of worked in tandem with Terra and Bitcoin in the entire crypto market, along with equities and the whole global market as we head into a recession, everything turned the other way. And it went into what they referred to as a death spiral. So the peg of $1 went to 95 cents, 90 cents, 80 cents, and started cascading down. So then all that Bitcoin was kind of deployed into the market to try to bring the peg back up to $1. That failed. And then the stablecoin has gone all the way down to zero. And with that, the Luna token has gone all the way to zero. So there were, I don't know how many billions of dollars, but countless billions of dollars were just wiped off the face of the earth.
60 billion gone.
Yeah. I mean, it's up there in terms of the biggest collapses in any industry in history. So
but wasn't it
it's just unbelievable to watch.
There was all these rumors, and we don't know if they're true. They had gotten the loan, they had borrowed some hedge fund, whether it was Citadel or somebody else, had called Gemini to borrow 100,000 Bitcoins, and then they use that to sell off either Terra or something. But that's really what they're saying is caused the collapse.
Yeah, I definitely don't know.
But nobody will admit to it because it's such a fucked up thing to do. Genius, but so fucked up.
Yeah, because if you took a short position out on Bitcoin and on UST and then somehow figured out how to initiate that spiral, then yes, there's a huge opportunity to profit off of that. But I definitely don't want to speculate on that because I haven't read any confirmed takes on that. But yeah, there were definitely a lot of theories going around about what happened.
Yeah, and everyone was Gemini was we didn't agree to that. No, but apparently the founder of Luna or Terra Luna was called Duquan.
Mm-hmm.
And they offered him something and he wasn't smart enough and he took the bait. And because of that, the whole collapse happened. It's it's such an interesting thing. I feel like Hollywood needs to make a movie on it.
Oh, I know. I was going to say that.
Because it's this little dorky kind of developer guy who's just super smart, looks super sweet, and is not trying to hurt anyone intentionally. And it's just okay. And then just causes the biggest collapse. Like
Yep.
it's insane. But it's like, is he the made up? But now he's launching 2.0,
Terra 2.
2.0. I'm like, is anyone really gonna go and back this guy? Like, I just, it's nuts. But hey, he doesn't give up. But like, I don't want to touch anything that Do Kwon has his hands on.
Yeah.
No way.
Yeah, I mean, it impacted. I think the impacts are still being felt. Like the dust is still settling. I've heard stories of even teams that did fundraising, like they raised money from VCs, and then they put that into UST, into Anchor Protocol. Oh, I can earn on my,
Shit.
and then that gets wiped out. The saddest part to me is like it was a really nice app. Like Anchor Protocol was very nicely built. It felt safe, it felt well built, and it was also branded as a savings account. So what I feel the most sad for is like people like in emerging markets, and like these people who maybe put their life savings in of hundreds or thousands of dollars, and then just getting wiped out. Like it's pretty crazy to think about, like all the stories that I'm sure are kind of emerging now.
Yeah, because some of these people were probably like, okay, it's pegged, like them thinking, okay, it's pegged to the dollar, it's stable,
Yeah.
I can earn almost 20%. I'm not ready to invest, or I'm still trying to educate myself. I want to sit on the sidelines. This is a safe place to do it. And then it's like gone, which is why I always say, guys, like, obviously, if it's too good to be true, only do what you can tolerate to lose. Like, it's just, until these things are FDIC insured, like, don't ever put your life savings into it, and always diversify. Like, I always say, think of the amount of money, whatever that figure is, and if you lost it, how long would you cry? And if it's only an hour, and then you said, okay, time to go make more money, that's the amount you should put in. If it's like devastation, you don't have the money. You don't have the money to tolerate the risk.
Yeah, I mean, it's all a portfolio game. So
Yeah.
what people feel comfortable with having in real estate and equities, gold, things like that, and then crypto is like just another piece of the pie. So
Yeah,
just a good reminder to never go kind of all in.
so that begs the question then, what are these other stable coins backed by? Because I know that from rumors around, the Twitter crypto community and other, Discord and things like that, people were starting to get a little skeptical about Tether.
Yeah. So I think it does help to step back and think about, the different categories of stable coins, because up until now, a lot of people, I think, were just tempted to think like, oh, these are all just $1. They're all the same. It's just a different brand.
Yep.
But the reality is it's very different than that. I think when you break it down, there's three main categories. So the first main category is a fiat-backed stablecoin. So of course, fiat referring to US dollars primarily. This means for every one, the most prevalent example is USDC, USD coin. For every one USDC that is issued into the market from this company that's actually backing it called Circle, there's $1, one real dollar, paper dollar in a bank account somewhere to kind of guarantee that this is a real dollar. There's one real dollar for every one kind of digital dollar that's in crypto. The second category of stablecoins is called over-collateralized stablecoins. So these are stablecoins like DAI on Ethereum, DAI, and aUSD on Polkadot that are over-collateralized, meaning let's take it to like a real world example. If you are getting a car loan from a bank for, let's say, $5,000.
Yeah.
Imagine you had to give the bank $10,000 to take out a $5,000 loan. So down payment, you had to give a down payment of twice as much money that you wanted to take out, which in reality, of course, is not realistic, because the whole reason you need a loan in the first place is because you don't have the money.
Yeah.
But in that situation, maybe you borrow the $10,000 from your rich uncle, and he gives you the $10K to put up as collateral or as a down payment for the bank, because that bank is very cautious, very conservative and safe. But that bank knows that if you run away with their $5,000, they've got double the amount that you took out as a loan from them. So they're safe, because if you run away with the 5K, they're going to take $5,000 of your uncle's money and then return the rest of the $5,000 to him. But
Right.
if you pay back the loan as most people do, then they'll return all the $10,000 collateral or down payment to your uncle. That's an unrealistic, of course, in the real world, but that's how over collateralized stablecoins work in crypto. Instead of a bank, you're actually interacting with, we call it a protocol, but basically an online kind of decentralized system where you give collateral basically as a down payment. In aUSD's case, this is multiple different types of collaterals are accepted, but Polkadot, the DOT token, is probably the most common. You give, let's say, $1,000 in DOT as collateral to this protocol, and then you can take out $500, so half as much, in aUSD. So this system then has twice as much DOT as you took out as this aUSD loan. But what that does is, because DOT is not a stable coin, DOT can fluctuate.
Yeah.
So if the price of DOT crashes 50%, this system will automatically sell off some of the remaining DOT that it's holding as your collateral, to bring the system back up to kind of equilibrium, to make sure that there's still twice as much collateral as the system has issued you in stable coins. So this it's called a liquidation, where it's an automatic sell-off to maintain solvency, so that assets are greater than liabilities in the system.
Yeah.
And this ensures that the peg at a dollar is always maintained, because there's something actually backing it. There's real crypto backing it. And ironically, this is what, when we were talking about Terra buying up all that Bitcoin, they were trying to actually move closer to this model that's been proven by DAI. DAI has been in existence, I think, since December 2017.
Okay.
So DAI has proven that this over-collateralized model for decentralized stablecoins has been proven through the ups and downs of the market for the last 4 or 5 years. And that is actually why, when we made this decision on aUSD 3 years ago, we chose the over-collateralized model, because we knew if we were going to have a stablecoin that's going to be kind of the core stablecoin of Polkadot, it had to be really safe and reliable. Couldn't be something that's more experimental, like some of the algorithmic stablecoins were.
Yeah.
So anyway, that's the second category. Then the third we already talked about, which is algorithmic. But these all definitely do have trade-offs. One thing that you may already be kind of thinking is, we call it capital efficiency, but how well can you put your money to work? If you're using an over-collateralized stablecoin, the capital efficiency isn't quite as good, because you need to give twice as much money collateral to take out the stablecoin loan for yourself, if you want to go about it that way. Of course, you can also just purchase stablecoins on a market without collateral, but I'm explaining that because this is how the actual peg is maintained at $1.
So the algorithmic coins, what are those? Just so people know, it was obviously the UST.
UST, yeah, UST is one. So ironically, Tron actually released, I believe it's called USDD, but they released that right before the Terra crash happened, and it was the almost exact same model that Terra was using. So that was very poor timing on their part, unfortunately, but hopefully they're learning from what happened to Terra and trying to evolve with that. But
yes,
that was another example of an algorithmic stablecoin.
And then what about USDT? Tether.
So USDT, Tether falls in the same category as USDC. So these are fiat-backed stablecoins. So
that one's
backed by a dollar,
safer.
Yeah. So I would say, so the two most like trusted models right now are fiat-backed, because they're backed by real dollars and people trust that, especially like institutions and things like that. And then over-collateralized stablecoins. The main difference is that over-collateralized, and keyword is decentralized stablecoins. This is true crypto. Like this, there's no tie to governments or fiat currency, which is the whole the whole point of crypto is to build an alternative financial system that is decentralized.
Yes.
But one thing that is definitely going to be starting to become a trend now and will be for the next 5 years is like this whole concept of Web3 is beginning to be talked about a lot.
Mm-hmm.
And Web2 is what we're all used to with like banks and traditional apps and stuff. But I'm starting to call it like Web 2.5 is where we are now. We're not going to flip a switch and go from purely centralized to purely decentralized. So in order to get the world to shift to Web3, things like centralized, like fiat-backed stablecoins are existing. So it's built on a blockchain, but it still has a tie to a bank. So it's kind of like in this middle ground of like kind of crypto, but kind of also still what we'd call centralized. There's still third-party companies that could do something to interfere with or censor transactions that are going on that blockchain. That's kind of one of the downsides of that. But then the upside of fiat backed is that, like I said, backed by fiat, people trust it, and you always know that there's $1 that can be $1 in a bank account that can actually be redeemed with the USDC or the USDT. And these companies like Tether and Circle, they actually do audits. So they get audited by, I think, like Grant Thornton, some of these big, like huge auditing firms to make sure that there is in fact as much stable coins in the market as there are dollars in a bank account.
So why do you think that there was like rumblings of Tether losing its peg?
Mm-hmm.
Is that people just being skeptical and or people just don't know what the fuck they're talking about? They're probably like, stablecoin, that's going down too.
Yeah, I think that was my takeaway, was that it was a little bit of an overreaction.
Okay.
It slightly lost its peg. I think
it's at like 99
it's not
last time I checked, and it's been there.
Yeah, it happens like a little bit sometimes to these stable coins, and it's not the end of the world. I think everyone was at that time was just so sensitive to anything below $1. Like, so people started freaking out. I know a lot of people sold like USDT for USDC to just like switch out of that. But from what I've kind of gathered since then, I think it was mostly just people that were, I don't know, in fear and kind of doubting the situation. But I'm pretty sure they've mostly just recovered now since people have moved on a little bit.
This is great because there's not a lot of conversation around stablecoins, and I think when people hear crypto, they're wanting to learn about crypto because this is such a new space. So everybody's kind of learning together. They hear about the traditional companies and the coins they can buy in the exchanges, but people don't talk enough about the stable coins and the importance of them and how they can be utilized and how you can earn more, but obviously know what you're getting into. So I want to ask you, I think we've covered a lot of the stable coins, but the last one I want to ask you about is the Gemini stablecoin, the GUSD, because I know a lot of people will use Gemini, and that's a platform where you can earn interest by lending out your Gemini. What is that backed by? What type of stablecoin is that?
I'm 99% sure it's also fiat backed. So same as USDC and USDT. I've done a lot more looking into the other two, to be honest. But because they're a US based company, I believe they're based in New York, and I know they focus a lot on regulatory compliance. So with that being said, I'm almost 99.9% sure that it's backed by fiat dollars in a bank account, just like USDC and USDT.
Yeah, it's those Winklevoss twins.
Yep, exactly.
Winklevoss. I can never say their name. I gotta get the
Facebook twins.
Gotta get their asses on this podcast. Exactly, the Facebook twins. I think that they're making out a lot better. They're a perfect example, I believe, of things happen for a reason. When you feel you get fucked, stand up for what's right, but also move on with your life, because at the end of the day, they're gonna win, not Facebook, which people think is pretty much irrelevant at this point.
And I know I've read, we could probably Google this, but I think when they won that case with Facebook back really early on, I think it was in like 2010, 2011, they put a lot of that into Bitcoin.
Yeah.
And I think we're probably laughed at.
did.
I mean, that was back, no one understood Bitcoin back then. And they've been just building and building and building and just had strong conviction. And
Yeah.
clearly they were right. And this still isn't the end of the game yet. So
No.
yeah, really, yeah, respect to them.
Yeah, I mean, they're really fascinating. If people have been on this podcast that are actually have been convinced by them to get into this business. But yeah, just fascinating stuff. But yeah, I have heard that from other people too, that they are very compliant. So they're they own it's the Gemini platform we're talking about. So it's people feel more safe utilizing them. You know, BlockFi was another big one. It didn't have its own stable coin.
No.
But you could lend out your certain other coins and earn a yield. But they obviously had some problems like with the SEC and being fined. So but Gemini seems to be pretty good. So what is going to be the benefit to people buying the Acala coin, which is your coin?
Mm-hmm.
Like what's going to make me want to go to KuCoin and buy the coin? Because it's pegged. So it's like, what's the upside for me?
So there's aUSD, which is pegged to $1.
Okay.
And that's where there'll be different places to earn yield, different applications building around the stablecoin.
Gotcha.
We just launched a $250 million ecosystem fund along with some of the best VCs in the industry to invest in teams, early stage teams who are building great use cases for the stablecoin. So that could be money markets like lending and borrowing, where you can lend out the stablecoin and maybe earn interest there. Decentralized exchanges, payment networks. There's been, even in the last, I think, 2 months since we launched it, there's been 70 startups who have applied to this fund. And we're bringing a lot of them through VC kind of fundraising rounds now. So that's all kind of happening as we speak.
Awesome.
And then the other thing to keep in mind is that since Acala is a blockchain itself, built on Polkadot, we also have the ACA token is like the native token of Acala that helps kind of operate the network. So transaction fees are paid in ACA. ACA is also the governance token. So any decision that's made for the network is decentralized. So those decisions are made not by the team, the core team itself, but they're put on a governance forum and actually voted on with tokens. So this is kind of where blockchains are headed, is
with the
token-based voting. It's basically a DAO, yeah. Okay. So everyone around the world, I think right now there's about 190,000 holders of ACA, and they all have the power to vote on decisions that kind of help shape the way that the network evolves over time.
That is so cool. And ACA is also available on KuCoin?
Yes, ACA is available basically everywhere. Not Coinbase, but yeah, like Kraken and Huobi and plenty of others. But
what about my friend Binance?
Binance as well.
I do like Binance. I just feel like Binance is just the easiest to use.
Yeah, they've done a really great job of making it easy for people.
Yeah. Okay, you're not on Binance. I just checked. But I will find
We're on Binance, but not Binance US. So maybe that's the difference.
That's why. Okay, I'll have to go find you. Okay, so all right, so you can buy so just so people can explain this, I always like to explain this in like dummy terms, because half of our listeners are like crypto enthusiasts and they understand it and they want to learn more, and then the other half are they come here and they get educated about crypto. So I always try to talk in terms that kind of repeat so they can fully understand it. You guys, so what he's saying is Acala is a blockchain built on the Polkadot network. This is a company you're the growth strategy officer for, correct?
Yep.
Okay, perfect. And then they're going to have a stable coin, which is a collateralized stable coin, which is the aUSD. Eventually, you'll be able to earn yield on that like other stable coins, but you can invest in their blockchain by buying the ACA token. So this sounds like it's a fairly new token. There's only 190,000 tokens that have been issued, or
190,000 holders.
holders.
And that's like what we'd call on chain. So these are people who are holding it in like a wallet in their browser. That doesn't count all the people on exchanges. So it's actually a pretty huge group of people for a network that just launched in December.
Yeah, no, absolutely. Since I can't bring it up right away, is it still under $1 or is it over $1?
The ACA?
Yeah. I want the one I can make money on. This stable shit. I got enough stable shit in my life. I want the risk.
That's, maybe I shouldn't comment on the price, but it's easy to Google.
Okay. So you guys you can also go to, so obviously go to KuCoin. And then there's another app that I like to, like CoinGecko is it's one of those where you can find out where different coins are and where you can find them on exchanges and things of that sort. So definitely check that out. Well, I mean, this is exciting stuff. I have like so many other questions. We're going down like I love that this was a stable coin kind of education series, because I think that most people, like, as I said before, just heard stable coin and was like, oh, cool. And now I can throw it into something else and I can earn yield, not realizing that these stable coins weren't so stable. So if you guys are looking for something safer, obviously do the fiat backed ones, but but you're right. As we actually get to Web3, we're gonna, obviously be more decentralized. They'll want these non-fiat backed stables.
Yeah, one point on that that I think is interesting to think about over the past few weeks is that with this whole Terra thing that happened, it brought a renewed kind of focus on exactly what we've been talking about, like how stablecoins work and the importance of collateralization and things like this. In the exact same manner, in the next 10 years, 10, 15 years, there, in my opinion at least, there will be an event that makes decentralization of blockchains matter. So there's a lot of these layer ones out there that are highly centralized in terms of their investors, and their networks themselves aren't very decentralized. So as crypto gets bigger and bigger and bigger, and Bitcoin makes its way to $500,000 million, governments will begin to care more and more. So there will be increasing risk of these huge layer one blockchains being either censored or monitored or regulated very closely. So this is something else that I think Polkadot does very well, is that Polkadot's being built by these hardcore cypherpunk people who they even chat every day on fully encrypted apps. They're building this to be decentralized and last forever. So that's something else to watch out for, is now stablecoins all of a sudden matter. Decentralization of blockchains will all of a sudden matter, but it's going to take another catastrophic type of event of a blockchain being basically crushed by a government. That's I think where we're headed, because right now there's a lot of blockchains that aren't prioritizing decentralization, and a lot of investors who don't necessarily care about that. They're more interested in just making money in the short term. So something to just watch out for as you're using like different blockchain networks, like looking under the hood and how decentralized are there, because that will begin to matter.
So, okay, so let's talk a little bit about that, because I just want to make sure that's kind of clear. So is there one particular that you're, or one or two that you are kind of thinking of? Or do you not want to name a name?
I don't think I want to name names. There's major blockchain platforms that have high concentration in investors. So if you look at, basically it's like their money supply, like all the tokens that are currently in circulation on these networks, some of them have like 2 or 3 venture capitalists that own a huge piece of that pie. So they have a lot of influence over the network. If there's, let's say there is governance decisions being made, as holders of 15, 20% of their entire supply, that one person or that one firm can have control over everything the network does.
Yeah.
That is not decentralized.
Right.
So on the other hand, like if you have a network with thousands, hundreds of thousands, or millions of different holders, and it's very distributed, that is a truly decentralized network that's kind of operated by the people. Of course, there's going to be bigger and smaller holders, but that is kind of one aspect of the decentralization. The other piece is a little bit more technical, but it has to do with these basically like servers or nodes, as we call them, that operate these platforms. The less nodes that there are that run the network, the more each individual node can impact or affect the network. So you want networks to have hundreds of different nodes or validators that are helping to secure that blockchain, because it's much harder for them to manipulate or cheat, or things like that.
No, very well said. So I'm going back to the government coming in. So you think that there's going to be an event where the government is going to come in and shut down the blockchain, or just fully regulate? Because they're trying to come in and regulate crypto right now,
mm-hmm.
but they haven't been able to fully do it. Because they're not that smart. That's the problem. The government is not smart. So I think they're just like, what the fuck is this?
Yeah, there's still a lot of learning. Sorry, I'm getting a little bit of an echo. Still a lot of learning going on in DC. So obviously I can't predict the future, but it also depends on where these teams are based. So if a team is based, let's say in the US, and there's strong kind of regulatory pressure, then there's a chance that they could ask them or force them to take some sort of action. Whereas other networks that are more distributed, less centralized, they will have the ability to continue operating just like Bitcoin. Bitcoin is truly decentralized. It can't be stopped. It can't be shut down. It can't be censored. Right. It's literally impossible. But where we may see things head to is that you've got like 2 categories. You've got Bitcoin and like the fully decentralized world that can't be stopped. And then also we may start to see more blockchains and even products within blockchains become more geared towards like regulatory compliance or different jurisdictions, like operating in certain models in certain parts of the world, but still on blockchains. But that helps to serve specific clients, like let's say enterprises or institutional like type of funds, or whatever you like, wealth funds, things like this, who have requirements. They have to meet local requirements with regulators. So they could still get the benefits of DeFi, but using an environment that is regulatory compliant. So that probably includes things like KYC, AML, so know your customer, anti-money laundering. These are requirements in a lot of the parts of the world. But I think a lot of blockchains will start to kind of spin up like kind of environments that help companies to comply with local regulations. So that's not fully decentralized in the same in the same way that Bitcoin is, but still allows people to get the benefits of blockchain, of decentralized finance in this whole world. But yeah, definitely a lot to wait and see how this all plays out.
Well, yeah, because it's got like my head's like spinning. I'm like, because I'm trying to think of different blockchains and like how centralized they are, because you brought up earlier in the like in this specific segment of the conversation, the VCs, and that there are tokens. And I've had friends that have said to me, oh, you should look at this coin. Oh my God, yours was the coin. They said you should look at ACA. This was like 7 months ago. And they said they have a ton of VCs backing them.
Mhm.
And it was the ACA coin. And I thought, is that a good thing or a bad thing? And he was like, no, I think it's a good thing. But does ACA have a DAO?
Yeah, so that's a great point.
Because that is so weird. It's amazing how like the pieces start to come together.
Yeah.
Because I remember writing it down and then I went to go look it up and for some reason I got distracted. And I'm glad I didn't buy it 7 months ago because everything's gone down since that point, like the whole market. But he was saying you guys have a lot of VC money behind you.
Yeah, so this is definitely one way that I use to evaluate the strength of teams. So you can look at VCs that are backing different teams, and if like Polychain or DCG or Coinbase Ventures, these teams have been around for a long time and they know like what quality teams look like. So as a person, in the kind of general public or maybe on the outskirts of crypto who is new to all of this, it is a good kind of litmus test for quality. But with that being said, the distribution is kind of what I was referring to. So if you look at our VCs, we have probably over 30 different VCs, which means it's widely distributed. And you can also look at our website on how much of the token supply was allocated for investors. So that also, you also want that to be a relatively low amount of the total supply so that you don't have like I said, like 3 people controlling a huge percentage of the network.
Yeah.
The flip side of it is teams who don't go the VC route. We went more of like the traditional, like San Francisco style, like seed round, Series A, because that's what we wanted to do. But some teams go fully kind of decentralized. So they launch a token and then people all around the world can kind of just acquire this token.
Mm-hmm.
But whenever that happens, there's also VCs that are maybe not on the website, but they're also most likely getting involved in that project as well. So yeah, I think like when people ask me how to evaluate projects, that's actually one of the first things I say is look at the quality of the investors and also look into their security and their auditing processes, because a lot of the mistakes that happen or a lot of the issues that happen come from a lack of focus on like security audits and just ensuring that there's as few bugs as possible in the code. But yeah, it's funny that you're kind of like going full circle back to Acala now.
Well, it's weird. I have to text my friend when we're offline and be like, you'll never believe it was on the pod. I just put 2 and 2 together. That you told me to look into and that you were excited about. But this is my friend that originally got me into Cardano years ago.
Mm-hmm.
So he's, he finds these coins and then he just like loves them and like rides them. And he was like, it's new, great platform. It's awesome. Got to look it up. Lots of VC money behind them. I'm like, okay. And I remember writing it down and then I think somebody called me and I just walked out of the room. But I remember seeing it and it's probably still on one of my notebooks around here. It just said ACA, KuCoin. Like that.
Crazy.
It's amazing how the world works out and how things happen, right? And they come back to where maybe I was meant to buy ACA, which is why you guys found me, so I could come buy the token. But no, this is a fascinating conversation. So I do want to talk a little bit more. I know that we're running out of time, but I just want to cover. Okay, so there's no place to earn on aUSD quite yet, but that'll change in the next couple months or something.
There's a couple, but it's very like, it's a crypto native. You gotta really know what you're doing. There's another team in the Polkadot ecosystem that has integrated aUSD into a decentralized exchange. So you can basically, it's called providing liquidity, being a liquidity provider. So like aUSD and another token, and you're basically helping to fill the order books, for allowing people to trade on certain pairs, and you get a percentage of the fees for every trade. So that's where we are now. But like I said, this is
that DeFi or that DEX.
That's on Zenlink.
Zenlink. Okay.
So that's on both Polkadot and Kusama, which is like Polkadot's experimental network.
Okay, perfect. All right, yeah, and then ACA, which is the blockchain. And then just real quick summary, because I know we were talking so much about the stable coins. So we learned about Polkadot. Tell us just a little bit more about the Acala blockchain.
Yep. So Acala has, like I said, the core product is aUSD, the stablecoin. But on top of the blockchain, we have an Ethereum virtual machine. It's called a EVM. And this is basically, you can think about it like, I don't know, just like a place where you can launch applications that are Ethereum compatible. And the reason why you would want to do that, even on Polkadot, is that the language that you use to build to build applications on Ethereum is called Solidity. And this is by far the most known and adopted blockchain development language in the world. So a lot of teams, whether you're on Avalanche or on Near, Polygon, Acala, we're offering an Ethereum compatible environment so that teams or these developers all around the world who have already learned this language can use the skills that they've already acquired, but build on a blockchain that is more fit for their application. So Acala being more fit for decentralized finance applications. There's this EVM is about to go live, so we're going to start seeing a lot of different teams launching on Acala, and a lot of them will be building around our stablecoin. So this is why I mentioned that ecosystem fund that we put together with a lot of VCs is to help to fund a lot of these new teams that are building great applications on Acala. So that's definitely something to watch out for over the next month or so, is that a lot of these teams are going to be launching. If you look at Ethereum, it's like the Uniswaps, Aave, Compound, like these are the kind of the big DeFi names. And the same types of products will be rolling out on Acala soon. So money markets, DEXs, and so on.
So is it primarily DEXs and money markets then?
It's DEXs, money markets, but it's the full spectrum. So we've also got a team called Project Bankman. Really excited to see them in Austin this week, where they're based. So they are building, this kind of came out of nowhere, but I've known their CEO for a while, Gavin, and they're building NFT and loyalty programs on chain or like on a blockchain for huge brands. So the Chive is one example. They're a website kind of similar to like Barstool Sports, like comedy and sports and things like this. They have a huge community, and they're taking their loyalty program and making loyalty points actual blockchain tokens. So that means these loyalty points can be sent to one another, and they can also be used to redeem in their merchandise store, where they have merchandise from like celebrity partnerships with like Bill Murray and Chris Farley and people like this. So that's a really cool example. And then
that's awesome.
Another place they're headed is airline loyalty points. So they're going to be bringing airlines onto loyalty points onto a blockchain, which is kind of mind blowing. But imagine being able to take, like, you've either earned like silver status, gold status, platinum, and being able to get that in your, let's say, your United wallet. And you could actually send that as an NFT off your wallet and into the kind of blockchain world and sell it. What that allows the person on the other side to do is, instead of spending years and thousands of dollars in time to acquire platinum status, you can just buy it. So
because you can't do that right now, right?
No,
unless you like the miles. And I like, for example, like my dad has like millions of miles. I'm like, you better start traveling because you're not going to be able to use them.
Yeah.
And so now it's like he could be like, oh, I'm only going to use 500. I can go and sell.
Yeah.
So
miles.
Are they building on your blockchain?
Yeah, it's built on Acala. So the Chive is launching on Acala.
Going shopping shortly, if you know what I mean.
Should be this summer.
Amazing.
The Chive should have like 1 to 3 million users on Acala very soon for their loyalty points program. And then yeah, the rest of these, there's going to be a lot, especially as we, like, the key is, like, we just need to launch 1 or 2 of these and be able to show the live example to other potential brands. But this has been a huge issue for companies, because if you're like an airline, the loyalty points are huge. They're a liability on their balance sheet. And when you convert these loyalty points to tokens, they flip into becoming assets. So these are assets held by the airline, and these tokens can actually increase in value as even with, I guess, the brand gets better over time, more awareness, more people want to own the points, then the market value of those points will increase. So it also creates this
That's so interesting. So to put it down in like dummy terms so people can fully understand what we're talking about. So if you have 200,000 airline points, you can convert those, correct me if I'm wrong, on this Chive network as they're building it out, you can convert those into tokens.
That's a separate network from the Chive. The Chive will have their own loyalty program.
Okay.
Using Chive points, which is like they get points for like posting pictures or participating in things, and then they can redeem it in a merchandise store. And then so what Bankman is doing is like white labeled loyalty program. So one of their clients is the Chive. Another client would be an airline. Another client could be brand Z, you know?
Okay.
So they're building out specific programs for each of these brands.
So if they were able to turn the miles into tokens, would these be like dollar peg tokens where it's just 1-to-1, or would it be you could take 200,000 miles and buy whatever that conversion rate is, so it goes up in value?
Yeah. So this is still all being figured out. I don't want to maybe make any like
put the
definitive comments, but
right.
but I would expect it won't be dollar pegged, because if you just have a fixed
then
amount
that
of
doesn't
points,
seem like an incentive. You would just be like, why wouldn't I just leave it?
Yeah, by having it like determined by the market, then the actual value of the point will be determined by supply and demand of whether or not people want to use that point. But their vision also is to make a multi-brand marketplace where if I get, like, let's say I get a gift card to, like, I don't know, the Lego store for my grandpa, and I don't want to use that. Right. I will go sell those points, probably for like 1/10 of the price that I would pay for like an airline point. But you can exchange, it can be a point exchange that is kind of like cross-brand. So
yeah,
like things like this is where loyalty is headed using blockchains, and it's going to be really, I think, really exciting to see.
And I think that's good. I mean, some of these companies you heard, like Starbucks, for example, they called Starbucks kind of a bank. And people are like, no, it's a coffee shop. I'm like, no, it's a little bit of a bank, because people would load up the Starbucks app, they would load it up so they could just flash their phone and walk out the door. But all you're doing is giving Starbucks a free loan. And then all these gift cards that people got, half the people would lose them. So it's just free money.
I know.
So at least it will keep the receiver of the gift and the giver more protected, versus just having these companies like get this free money, because it's usually what happens. Half these gift cards go unused.
Yeah, and the brands like it. Like if you're Starbucks and there's all these points out in the world that are unused, those are actually liabilities on their balance sheet. So there's not.
I don't think most people realize that. So that could help the price go up if they can get those into assets.
Yeah, because they have a lot of uncertainty. They have to probably do a lot of prediction around, like, okay, how many of these points are going to be redeemed, how many are going to be outstanding, and modeling based off of that. But if these can become actual points that are tokens on a blockchain, then that is an asset that they're holding a portion of on their books as a company. So
fascinating.
We'll see. Maybe you can talk to Gavin from Bankman sometime and learn more about this.
I would love to do the introduction when we get off. He needs to come on for sure as like a follow-up to this. This is amazing. Yeah. I'm glad that like it triggered the VC thing, triggered the ACA, and then we got to talk more about what Acala is doing, because this is amazing stuff. So All right, so I know that we've gone on a little bit longer, but this was such great stuff. So where can everybody kind of find you? Obviously, KuCoin is where you can find ACA, which is their coin. Is there another place you want to kind of drag them to learn more? Your Discord, Twitter, any of that?
Yeah. Our Twitter is at Acala Network, and there in our bio is a link. It's a link tree, so basically all of our links, so Discord and every channel. So it's probably the easiest place to go.
Okay.
My Twitter is at Dan Reecer _, and that I tweet a lot about like Polkadot in general and Acala and in general crypto stuff. So
Okay.
you can follow me there. Yeah, but appreciate you having me on. This has been a lot of fun.
Yeah, no, this has been great. It's been eye-opening. It's been educational, and I hope that you guys all learned something about another blockchain and all the innovation that's happening in this section. So you can educate yourself, and again, never invest more than you can afford to lose. And with that being said, thank you so much for being my guest, and thank you everyone who's listening. We'll see you next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@nexttomadison.com. I thank you again for listening. Bye.